Hi,
Great.
Richard. We're so excited to have you on Yalla NFT. So
Hey,
Richard
thanks
is
for
a
having me.
co-founder. Richard is a co-founder and partner at Underscore VC. He leads the firm's investments in the area of blockchain, AI and machine learning, mixed reality, and serverless technologies.
Nice to
Yes,
meet
thank you
you.
for having me. It's
Yeah,
excited to be on with you guys.
welcome. All right, so to get things started, tell us a little bit more about what you do and what areas you focus on.
Sure. Yeah, so I'm a professional investor and we manage money from some of the leading endowments of the world, many that you would know. And our job is to partner with earliest stage founders. So think 1 and 2 person companies that are incubating in garages and help them grow and partner with them to provide capital, but also resource in the form of knowledge from the community and the like to help build companies. And we've been doing that for, geez, probably about 7.5 years now at Underscore. And then before that was doing the same, but at a different firm.
And then do you also have a hedge fund that is like a crypto hedge fund? Can you tell us a little bit more about that too?
Yeah. So in addition to the venture capital, meaning early stage investing, predominantly in the equity of businesses, we also manage a dedicated crypto hedge fund. It's really just for partners capital, so it's not back to some of our investors yet. Although we do think in the farther future, let's call it 2-3 years out, that we may formalize that. And so this is sort of our pilot entity where we're learning, experimenting, and that's everything from DeFi and lending and staking and mining, even active strategies, running nodes, and also even doing NFT purchases or even fractional NFT purchases. So sort of a catch-all bucket for everything that doesn't necessarily fit in the day job of a venture investor for crypto.
Very cool.
Yeah, that's very interesting. So adding on to your crypto hedge fund, when did you actually first get into crypto?
I don't actually know at the end of the day. I was thinking about this and I would say it was around 2014. And one of the hazards of this job is you're always playing around in many different areas of the web. And so I think I had read somewhere on like Reddit or something like that, that people were doing this interesting thing with decentralized currency. And I actually had read a paper by a guy named Frederick Hayek many years ago. It's like I don't know, I don't even know when he wrote it, probably early 1900s, Austrian economist. And it was around what was called the denationalization of money. But the basic premise was that at some point there would be competing currencies to some of the existing reserve currencies we see in the world. And so when I saw this post on Reddit, wherever it was, started digging around in that and eventually found my way to a company that was called Coinbase before even their seed round. And we didn't invest in them for what it's worth, although that would have been a great investment. But I was probably in, let's call it the first 1,000 to 10,000 users of Coinbase.
Wow.
It was really, at that moment in time, your alternative to doing something on Coinbase was you go to your local parking lot and then try and meet somebody in person to exchange a Bitcoin. It was literally how exchange of Bitcoin was at that moment in time. And so we ended up signing up for Coinbase, bought a Bitcoin, I think for about $600 at that moment in time. And then since then got involved in lots of other projects, mining and staking on many networks, which we can continue to do this day. And as you know, the rabbit hole goes very deep, which has been very fun.
Yeah, I remember Adam and I made a little bit of an investment. Wait,
2017,
2017 in Bitcoin. And it was just again, a learning experiment. And we bought it, held on to it for a month and then sold it.
Yeah. Yeah, well, this is, I think anybody who's been in the space as long as you guys have has had that experience where they tend to regret some of the decisions they've made along the way. And it's a very volatile market. I think that's what's interesting. You're starting to see institutional capital, I mean, real hedge funds of the world starting to take this space seriously because there's a lot of volatility underlying it. But what's interesting is, for us early stage venture investors, you're now starting to see later stage, generally liquid private markets, people kind of coming down into the venture ecosystem because there is no Series A, there's no Series B in a lot of these companies. They just go from early stage network to live and publicly traded in the world. that means, you know, the average individual, if they're paying attention, can actually get involved in some of the most interesting companies. Whereas historically, maybe they couldn't.
Yeah.
Right.
Yeah. So we've been talking a bit about your investment firm. So what is like your general thesis about Web3?
I think it's a good question. The hard part is Web3 is so broad. In many ways, it's talking about all these different areas. But if I had to distill it down to a single word, I think it's ownership at the end of the day. To me, you can think of the generations of the web, and people are calling this Web3, but Web 1 was really just read. People were putting information on the internet. It was, think, the early information, which some of the biggest businesses were about understanding and making sense of that information. Think Google and the like. Web 2, as I saw it, or see it today, is about marketplaces. So as you had information online, then it was not only just read, but it was write, and the ability to interact with others. And so you saw great companies like Airbnb and Uber and Amazon basically starting to connect buyers and sellers in the world. And I think that was this next generation of the web. As I think of Web 3, just like the previous two, which were kind of read and then read, write, I think this is read, write, and own, where you can do all of the things of Web 1 and 2, but the first time in the world you can actually own pieces of this network. And so an example being like the Uber of the world, right? The drivers don't actually own the value creation they're really providing. They can get paid, but they don't necessarily own the upside. And I think that's what we're starting to see as we go into this next generation, where ownership can really be managed. I always wonder as an investor, like what's the why now that enables that? And the reality is, before, you never really could have managed more than 1,000, let's call it 100 investors or 1,000 investors to communicate with them. Blockchains uniquely allow you to have the ability to have distributed ownership. And I think that's one of the uniquenesses. And so it plays out in a lot of different forms. I mean, that could be in the context of NFTs, like we're talking about digital media, whether that's music or images or the like, but it can be many other things. I think it can be the self-sovereign individual and the data that they own, as opposed to me going to Facebook and basically logging in to see my own data that I actually don't control. It's actually the inversion as we go forward is I actually own all of the data, and these apps can then permission it from me. So it really inverts the ownership paradigm. And I think that's the next generation of the web that we're looking at. And that's kind of our macro investing thesis in it.
Can you add maybe a little bit of color to some of our listeners who are not very familiar with NFTs? Like, what are NFTs, and this idea of ownership, what does it unlock, I guess?
Yeah, so the first part of the, let's call it crypto asset wave, was these, what people call fungible. It's a really stupid term for basically interchangeable, but without differentiation. So if you think of like a coin, you have a coin, I have a coin, we can switch them, and effectively, they're the same. Same applies to things like gold or oil. It's all fungible assets at the end of the day. Then you started to see people tinkering around and ask the question of, why can't it necessarily be a unique thing? And instead of something that's fungible, let's call it fungible, or meaning unique as a complicated word for unique. And that can apply to lots of things, whether it's digital certificates like a academic credential or a work credential, as we see people get university degrees. I think the same applies for all forms of media as well. So you can think of that as text, image, basically any content blob that is unique. Effectively, you can say is a non-fungible token, and you can put it on a blockchain to represent that scarcity. So it's sort of a complicated, I'm surprised actually the term non-fungible token took off, to be honest. It's a pretty complicated way to just think of a unique digital
token,
asset.
right?
Mm-hmm.
Yeah,
Yes.
unique digital asset works better, I think.
Content, yeah.
Yeah. So what are some of the examples of investments you've made in this space?
Yeah, so some of the most interesting investments, I would say we've invested in companies like Chainlink, which are a decentralized oracle. You can think of this as a piece of software that brings external data, think of it as anything that's off of a blockchain to a blockchain, and does that securely. We help get the company going from a seed stage to where it is now as a multi-billion-dollar protocol. Others like Ceramic, which is a data web effectively for the self-sovereign individual, meaning you could, instead of store it on a server at Amazon, you can actually store your data in a decentralized cloud, which is, that's a very early stage investment. And there's others like Masari or Kiker, which are really just more markets plays. And one's a data aggregator for crypto asset investment managers, and the other is a piece of software that goes to every exchange and pulls the most recent prices and order book. So we're, I think, categorically investing generally in the infrastructure. We think we're in the infrastructure build out phase of this technology. And I think we're starting to come to the next places where the application layer is being developed. You see companies, especially in the NFT space, starting to consumerize a lot of the underlying technology that was otherwise pretty unusable for the average Joe.
Right. It's still pretty, there's a lot of friction if you are just an average consumer trying to get into this space, right? And
it's not easy, user friendly.
Yeah.
Yeah, I mean, we joke internally that it's hard to believe the future of the internet is a Chrome extension, right? It's like MetaMask and some of these wallets, and it's just so clunky. Right. And one of the litmus tests we have as we think about investments at Underscore is, is this something our grandparents could use or our parents use? And the reality is most of this technology is pretty inaccessible. And I also think it's hard to understand we're kind of in this unchartered frontier space. And as smart as all of us are, we're in a great moment of experimentation where people are figuring out, where are the edges, what are the things you can do, what is actually novel and innovative and not possible, or what are the things that, we probably could have done that with just some of the Web 2 infrastructure. And so I think we're in this really interesting moment. I call it like a Cambrian explosion of just really interesting experimentation. And I think we'll see what works and what doesn't work. Just like in the early internet, we got to see ideas that panned out and they were absolutely right and they were at the right moment. And then the interesting part is there's other ideas that were exactly right, but they weren't at the right moment in time. Right. Like Webvan, and you see Amazon is kind of the other analogy. I think we're going to see early web vans and like really interesting ideas that get created, but don't necessarily meet the market at the moment where we are in its actual history. So I think in 10, 20 years, we're going to look back and see a lot of the first projects were launched in this period that were the right ideas, but they maybe didn't or did make it.
I was on a call earlier today with someone, and we were talking about Linden Labs. And I think this was like an early example and Second Life. And it was an early example of a metaverse, but I don't know that the time. Yeah, it was early, right?
Yeah, it was exactly the right idea. People were playing around. And, what's interesting as a investor is I've heard it said you either have to be ahead of it or way ahead of it, or the market is too early or way too early. And that's sort of the nuance. It's hard to tell at the beginning. And Second Life is a perfect example. It was the right idea. Now you see 5 different metaverse plays. And I think the commonality is that the underlying infrastructure has to reach a point of maturity. Like a Second Life wouldn't have been viable until the headsets were at wide distribution and the price point was accessible and good on Meta. And we'll see how that journey plays out as they kind of pivot into the metaverse. But I think the enabling infrastructure has to come into place. I do believe we're at a really important moment where scalability solutions, as we call them, layer 2 solutions, are coming to underlying blockchains, and those are going to make transactions much more accessible to the average person. And because right now it's prohibitively expensive to do anything with blockchains. $500 to send a JPEG from me to you cuts out a lot of really interesting use cases. When that's fractions of a cent, I think you start to see some really interesting things start to happen. Almost like a broadband moment. We also are calling it broadband moment for crypto, in that all of the internet, the scalability solutions came online October, November of 2021. And those are going to start to have people develop against them and build on them. And to me, that's the equivalent of going from, Rana probably knows, but watching a image load very, very slowly
Right.
after dialing up to, wow, we can watch video and we can stream immersive content over the web. And I think we're just reaching that moment with this technology.
I love that
Yeah.
analogy.
So you talked a bit about like the layer 2 solutions. Which ones in specific do you think like can take off?
It's a good question. If I had the answer to that, we would be very successful investors. It's very hard to tell. I think there's no shortage of them. I think last I counted, there's probably 12 or 13 viable, really good teams going after this. I think the ones that have shipped first, the Arbitrums, the Optimisms, the Stark X's, the Immutable X's, and others like Polygon, which are probably the first ever to launch, are probably the ones I would bet on most, because what happens is they launch and then people start building onto them, and it really is going to be a distribution game. Again, consumers aren't going to want to be switching from this network to this network to this network. And so whoever is the one who gets the broadest distribution the quickest as part of their go-to-market, I think will be the most successful. And so the projects that are furthest along in that are probably Optimism, Arbitrum, and Polygon as I see them thus far.
Are there any misses in this space, like investments that you passed on? You were like,
Yeah,
wish I was in there.
it's there's I kind of scars on my back from a lot of these things, but I think they probably fall in a couple categories. There's some that are specifically painful. I think OpenSea is a really painful one, where I would say we were non-contrarian. We put out this thesis in 2018 around non-fungible tokens, and I'll point you to the link. But I honestly think it was probably one of the best pieces of work I've ever done, and we didn't end up making an investment at that moment in time because my partners looked around and we said, this is sort of a niche category, NFTs. I'm not sure it's going to be big enough, and this was at a very reasonable sub $20 million valuation for something like a OpenSea, and that company's really gone on to great success. And I don't think anybody could have expected NFTs to break out as quickly as they did. I think we expected them to be one of the areas that consumerized blockchain and brought not only the the technical user but the non-technical user into the space. And I think we're going to continue to see that with people call it GameFi, but gaming generally. And NFTs continue to bring lots of creative talent. So OpenSea is definitely one. And there's a bunch of other infrastructure one, Blockdaemon, Alchemy, Dune Analytics, all these, very meaningful projects that unfortunately we didn't get the chance to invest in. But the great part is there's always new entrepreneurs taking on new ideas. And so our email boxes are open. So if you have any listeners who are building a new company, feel free to send me an email.
Absolutely.
So I think this is probably like the $1 million question. Do you think NFTs are a fad, or are they actually like here to stay?
I think they're overhyped and misunderstood. I don't think they're a fad. I think they're very, I call it frothy at this moment in time. Do I know if a Bored Ape is worth $500,000? I don't know the answer to that. It feels a little bit frothy. I do think the ones that have done the firsts, I call this like the first, if they're the first person to do the PFPs, like CryptoPunks, right? Those were a first, and they said, okay, we'll have 10,000 of these. And they created a design space that everybody else basically parroted from there. I would argue that the Bored Ape Yacht Club is basically a derivative of CryptoPunks. And so I personally ascribe a lot more value to the first that people are doing, the new innovative experimentation. And I think time will tell. It feels like there's a lot of money in this space and it's getting some attention. I do think humans are inherently collectors. And now you enable digital collectability, which allows much higher, I would call it discovery of things, right? If I was a baseball card collector, I basically have to figure out where does that baseball card exist in the world? And then I have to intersect the person who might sell it. Now, in a digital baseball card world, I have all of the visibility to where are the baseball cards, and I can make a proactive offer and I can communicate with that person pretty programmatically and easily. So I think you've added to just the basic idea of collectability a great market expansion, just because they're digital native collectibles. So time will tell. I think a lot of things, if I can't underscore it enough, that non-fungible tokens are the future of all information on the internet. And then it's just a question of what's the time to maturity? What are going to be the use cases that are really viable in the short term while it's expensive and the infrastructure is clunky?
Yeah. So like, I guess, what are some kind of trends or like new content in NFTs that you are keeping an eye on?
Yeah. So as I mentioned, I think firsts or experimentations are really interesting. Examples that I think are uniquely, or at least caught my eye, would be things that I would call an aggregation or build your own, sort of playing on interoperability. And these are things like smalls, where basically you can take, a piece of this and a piece of this and then put it together and then it becomes one thing. I think that's going to be a really interesting area. And in fact, it can be done permissionlessly, meaning one project can create something and then somebody can create a layer on top of that project. And that's a design space that's really rich and interesting of what it can be. And then there's others that I would say outside of interoperable are living, meaning they can live on the blockchain. Example would be like nouns, meaning basically every period they mint a new noun, and that goes on forever into the history of the blockchain.
Cool.
And so packs merge, I think, is an interesting one, where we can all collectively have particles and then they can aggregate. And so people are just experimenting. And so I think these experimentations in first will go down just in the history of the blockchain as things that people have never done and enriched the design space and put programmatically out there pieces of interesting art, if you will. And then outside of experimentation, there's one area I'm very interested in right now, which is I call making the non-fungible fungible, which is just like a mouthful.
Oh, okay.
But you can think of it as if we have a non-fungible asset, let's call it a CryptoPunk, we can put it into a vault on a smart contract and then actually issue tokens around it, meaning we then made a fungible thing out of a non-fungible thing. And so that enables, again, back to the point of ownership, collective ownership of otherwise non-fungible things. And I think that same paradigm is going to play out in lending. We're starting to see NFTs as collateral. Can I use a high valued CryptoPunk as collateral for a loan or something else on the blockchain? I think so, if it's considered a store of value. So those are sort of the areas, first and foremost, experimentation in first, fungible, non-fungibles, and then third is DeFi intersecting non-fungible tokens.
So cool. So, I'm an AI scientist and first and foremost, and you're a heavy AI investor. Do you see an intersection between AI and Web3? And if so, where?
I think this will be for good entrepreneurs like yourself to tell me what to think on these, because you're much more thoughtful about it than even myself. But I do think there's one category I think is interesting here is just data as a whole, which underlies most machine learning. It's really about the data game and the quality of the data. Some could argue that the value of data is a little bit diminishing with fast learn and things like that. But I would say there is an opportunity to have shared consensus, back to a blockchain term, on certain models or certain data sets that are interesting. And I think a lot around state management or owning the most accurate version of these models or data sets can exist on a blockchain. It also solves potentially incentive things, where I'd put the example of healthcare data, right? Images of lungs or whatever the heck it is.
Right.
That's an area where people uniquely to health outcomes, people have a benefit to put more and more data into that data set. And so instead of being a closed ecosystem, and this is only my data, I actually think healthcare is a unique area where people can put together, and to potentially manage the incentives around that, I actually think blockchains can help route value around who contributed that data, was it used? And beyond that, even things as simple as like data labeling, I think could be designed around things like crypto economic design.
That's so interesting.
Yeah.
I was thinking more along the lines of synthetic data and synthetic character generation, and like maybe even intelligent NFTs, right? That can talk, have a conversation with you and have some kind of perception, but that feels a ways out.
And well, actually, one of the hottest areas is generative
Adversarial networks.
NFTs. Yeah. So, you know, basically the ability to do generative. So the project I mentioned, Nouns, is actually, they use AI to generate a new noun every day with some sort of kind of scarcity profile. And so this whole category of like AI generative models that sit on the blockchain, I think are interesting as well. But I think it's much broader. I think, you know, data pools are going to be a really interesting area for this too, that maybe go beyond even, you know, NFTs.
Yeah. So what advice do you have for like people like me who just want to start getting into this NFT and Web3 space?
I think it's just get in. There's no better time than now to jump into this space. And I think it will reward anybody who jumps into it, because knowledge compounds, right? It's almost like a layer cake of, you learn one thing and then you learn the next thing and you learn the next. And before you realize it, you really had neurons firing and connecting in ways that other people who are just jumping into the space wouldn't have seen. And you also have a sense of the history of, oh, that sort of worked or that didn't work. And again, back to the layer cake of knowledge that compounds. I don't think there's a better thing you can do than get into this space. And that may feel tenuous or scary or anything at the time, because it's really raw. I mean, it's like getting involved in the internet, you know, in the mid 1990s. You know, it's very early and raw. The primitives are coming into place. But I think those who invest in that knowledge now and that take the risk to jump into it can really accelerate that forward.
I love that. That is, I think, a great place to end. Knowledge compounds and you just get right into it.
Yeah.
Thank you, Richard, for joining us.
Yeah, thank you guys so much. And yeah, you know, I think the only other piece I would add to wrap us up is that if there's a thing I'm excited about, it's about the young talent that's coming into this space like yourself. So excited to follow along and keep me posted in your journey. And hopefully this was helpful to your listeners and yourself.
Thank you so much.
Thank you for joining us.
All right. Take care, guys. It's good to catch up.